Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Wednesday, and we're now at the 29th of December, 2021, 6:40 p.m. Central Time. You know, you're getting thinner and thinner markets, and it causes the markets to swing more violently than normal. Now, I'm not saying the ranges are bigger than when you get a major report, but they come out of nowhere. They can be in the metal markets, $20 in gold, just like that, silver 30, 40 cents before you even know what's going on. So you've got to understand at the end of the year, the market players start taking days off. They're with family, they're on vacations, they're at home, they're not interested in the market at this point. That's what we have going on. It is a great time to step back a little bit. I own a brokerage firm. I don't want to say that, but it's just the reality of the situation. You're down a little bit in all of the energies except for the nat gas tonight. Flat in the bonds and notes. We'll see what the dollar does. I was surprised it got as weak as this today. Frankly, I was wrong in that analysis, but so right in the bond and the note. So, it just goes back and forth. So as we take a look at gold, what it's done right now is the market is down 0.75%. Let's call it that, 0.33% so far for the week, staying over the 18-week moving average of closes. Now, my delineation line is that 18-week moving average. When the market's over it, as a filter, I say the bias is up. Under it, the bias is down. And then move on to the other charts, and I look to see what's going on. So as we take a look at the action, I think you'd agree with me, from the high here of 1821.60 to the low of today, 1789.10, that's a $40 swing. And it's not that usual. Again, I'm going to attribute it to the thinness of the market here at Christmas. When we take a look at the pattern, the last break low right here, and that's the one you want to look at, right here. That took the market to 1785. So getting a breakdown doesn't bother me as long as you don't violate that number, because that keeps the pattern of higher lows on the swing line and higher highs in place. A lot of people have asked me about swing lines over the years. I imagine you can write them yourself. Take my charting course. It's all laid out there. I'm not going to write to you and tell you how to do it. Then you have to go to your own chart vendor or know the language they're writing in to do it. We make it easy. We have it available on this set of charting software and on our web-based one. So if you come with us, away you go. It's right there for you. So until you take out that 1785 level, how do I view the market? I view the market just the way I said it 2 days ago. If the market's going to stay up here and pull back, it's got layers of support at the 200-day average in gray, the 100 and the 18-day average. I'm also looking in this market to see, can we get a bullish crossover of 1789 getting over the 100-day average. And this was yesterday, Tuesday, December 28th. On the close today, we're still not quite there. The market didn't quite get the crossover, but you certainly fell back into the support and you held it like a charm. And now tonight, you're getting the crossover where the 18-day average is getting over the 100. Any move up, this market can be a son of a gun to the upside. What you want to probably see is today, and that's Wednesday's high of 1808, taken out fairly quick. Don't get back under this number. And what do you put into play? Well, at that exact time, you'll put into play wherever the Bollinger Band is, and that's 1820.30. If you were to just drop like this, you could take that out and go back to neutral. If you take out 1808 and then drop under 1789.10, you could set up a downtrend. It's that fast, but I'm not expecting that. I'm expecting this market to hold here and try to run towards that upper number. In terms of the slow stochastic reading, both numbers are not over 80. So you're just in an overbought market, which makes it always a difficult situation trying to buy an overbought thing. I tell traders, don't even bother. You walk away from something like that. In the gold-silver ratio, we've corrected from roughly the 82 ounces down to 78 and a fraction. You're now at 78.96 ounces. What does that mean? In a perfect world, you go to your local grocery store and you go, shh, I'm going to use your cart for a minute here, but I am going to return it. And you put your silver bars in there, and you're going to take your ounces of silver. You're going to have 78.96. You're going to go to the end of the shopping mall, and I know there's going to be that ideal character there that's got his glasses on. Can I help you, son? Or lady, daughter. And you walk in, you give him the cart. He takes out the ounces at 78.95. He reaches back, gives you an ounce of gold. So you've gotten rid of all this weight for 1 ounce of gold, and that's the game. So the lower the numbers go, it means silver's more valuable on a ratio to gold. That's all. When you look at the silver market, you have a higher high. You went up 2 days ago, hit that upper 100-day average in the Bollinger Band, classic what I teach in my enhanced Bollinger Band course, and backed off, and momentum turning down. I don't see anything to do in that market either. In the copper market, my bet is you aren't going to stay over the upper Bollinger Band, and it looked right. So what are the stochastics doing? Well, you can't count Thursdays because we don't know where they're going to finish out. So you go to Wednesday. Both numbers were over 80. You go the day before. My gosh, they both were over 80, not the day before. So if we come to right now to Thursday, if they finish like this, you get what's called a bullish scenario. You embed the slow stochastic. Another event took place. Take a look at the 18 and the green line, the 100. You got your push right here. This is when they went over. You made the high the day that happened. You've backed off. Will the market go for those highs again if you get the embedded reading? That's one of the things I'll be looking at. In the platinum market, I see a lot of resistance up here at the upper Bollinger Band to the 100-day average. What about the embedded possibility? Well, both numbers are over 80 tonight, but as usual, at 6:40 at night, you don't know where they're going to finish for the day. So you got to go to day before. Well, both were over 80, but not on Tuesday. You're just an overbought market in a resistance zone in an uptrend. In the palladium market, it's similar. Again, we don't count where we're at now, but for the day on Wednesday, both numbers over 80, both over 80 on Tuesday, not on Monday. Tomorrow's a key day. So we'll see if it does it. Now let's assume it embeds. Pretty formidable resistance at the 100-day average to the upper Bollinger Band, but that would still be bullish in the marketplace. Last in the dollar. I thought if the dollar cleared today, 96.25, it was going to move up to the upper band. Why? You had the pattern then of higher lows, higher highs if that occurred, clear sailing. Instead, it did it, and boy, did I get wrong. It fell right back to the lower Bollinger Band. It's called a trap. So instead of turning a nice possibility, it turned into an ugly trade with no trend. Now you have a higher high and lower low. Why bother with that? You know, one of the things that you know that we do is, and especially what I try to do, is bring you the information that we have, and it's a wealth of information at Linn. Why? We've been in commodities, all of us, literally our whole lives. We understand the game. We have a whole team that writes on it. We have people, be it energies, metals. They'll tell you what the spread traders are doing, what the options traders are doing, what's going on in the market, where it's going on, platinum, palladium, copper. We tie it together. We give you the special reports and the top trades. If you want to see what our clients get, why not take a look at our information for free? All you need to do is go to our website at www.iraepstein.com. Under the word, and you'll see it on the far left, free offers. Just go there to do it, or call my staff. They'll get you all set up. But I think you'll find it's pretty interesting. There's so many ways to see our information via emails that we send it to you and or through our charting software. I'm Ira. You have a great day.